If you're a new trader who actually wants to start making money trading cryptocurrencies or forex market, then this is actually something I wanted to try out. This is a very simple strategy, and it's not going to take you up to 5 minutes to learn how this works. And the funny thing about this whole thing is that it's something you can backtest over and over again, and you end up having way more money in your account than you actually started with. Of course, there's going to be some loss from time to time when you're trading using this strategy, but it still doesn't really matter, because at the end of the day, you find yourself making way more profit than you lose, right? Now, the reason why we have this particular blue line over here is just to guide us on, seeing when to actually enter a buy position or a sell position. All these blue lines you're seeing over here are what we're going to be using to identify the trend of a market, and we also going to use it to identify when to actually enter a market in a particular direction and when not to, right? So the concept of this whole market is very simple. Okay, so we only trade when the market, we only buy when the market is in an uptrend, and we sell when the market is in a downtrend. And we use something called the candlestick pattern. This candlestick pattern, you can find it anywhere on the internet, right? So let's go ahead and browse candlestick patterns, and you'll see the bullish candlestick patterns. We have the hammer, we have the inverted hammer, we have the continuation, we have the bullish engulfing, the tweezer patterns, we have the rising three methods, and so on and so forth. And when you come to the bearish, which is this one right here, you can also see that we have the same thing that we have over here in the bullish, but this time around it's going to be on the opposite direction. Okay, now you can take your time to go ahead and look at this and probably learn these candlestick patterns. You can maybe learn like 5 of each of them and know it by heart. For example, you can see the bullish engulfing candlestick pattern we have over here. If you come over here, it's called the bearish engulfing pattern. It's very simple to understand, right? So you can, the bullish, the green one is higher, engulfs completely the previous red one, and it closes higher. And the bearish one over here, the red one, engulfs completely the previous green candle, and it closes lower over there. So it's a very simple one to learn. And they also have the neutrals. Now this neutral over here simply means that the market is not entirely sure what to do, but most of the time this neutral signifies a reversal or a change in direction, right? Now I just wanted to know this is not the main thing that you need to learn for this strategy, but I just wanted to know that something like this exists on the internet, so you can always use it or refer to it every single time you're trading. Now what we are using over here is a very simple and common indicator that most people know about, with a very simple settings we put over here. What was over here is called the exponential moving average indicator. Just call it EMA. That's all you need to type over here in your trading chart. And you can see over here, this over here that says EMA. Go ahead and click on that. It's gonna pull up the EMA in your account, your chart. Let me go ahead and close the one I opened before. So this is how your chart is gonna look like once you pull up the EMA. And what to do right here is very simple. Now it depends on your trading time frame, whether you're a day trader, whether you're a scalper, or you're a long-term trader, whatever, anyone you trade is cool, right? But this is currently 15 minutes time frame. I want to show you exactly how this is gonna look with this particular simple setting I'm about to put right now. So all you have to do, go to the settings, go to the length over here, and change this length from 9 to 100. Now once you click on this, and you can see over here, it gives us a perfect signal line. Okay, now how this works is very simple. So every single time the market crosses the line, let's see the market is currently on a bull run right now, it crosses this particular blue line, that means the market is on an uptrend. Okay, as you can see right there. So every single time the market comes back and touches this blue line, then we start looking for a buy position, because remember the market is reversing to touch this blue line. This blue line now serves as a point of support or a point of market reaction. The market goes ahead and reacts at this point, and then we go ahead and enter buy position over there, and the market goes up, right? So this is actually one of the ways you can trade using this particular method. So we don't really just go ahead and enter a trade just because we have a market reacting, showing us a particular kind of reaction. Sometimes we have to use the candlestick patterns, to know exactly when it's right time to enter a position. Okay, so for example, if you're using this particular strategy I just showed you, You can see that we have a perfect bearish engulfing pattern right here, but you can't go ahead and take this trade to the downward direction. Why? Because the chart, the line over here is showing you a potential upwards. Now, how do you know exactly when this particular market is likely going to start reversing and going downwards? For example, let's say over here, the market, let's use something like here or places like here as an example, right? So the market is moving downwards for a short period of time right here, and then all of a sudden it changes its direction and start moving upwards, right? So how do you know exactly when this will happen? Well, it's very simple. First of all, I want to let you know that there can be some strong indicators, but sometimes they are not really that strong, right? It depends on your trading techniques and if you want to follow the strong indicators or not. So the very first thing I want you to do is to locate the previous low. For example, the market has been moving high all this way, broke this and started moving high as well. Go ahead and locate the previous low of this market, which you can see the low over here was this, right? And then it gave us a lower low and it retraced back to touch this line. Now, this is actually a very good spot to actually go sell here after this bearish engulfing candle right here. Go sell and, take your profit, maybe 2:1 or something, somewhere that maybe somewhere around this previous low or something like that. But you're obviously supposed to be watching your market regardless, okay? Now, it's a very nice trade for you to do that, and you can see that you would have actually, been in the market for quite a while or stuff like that. But if you look properly, eventually the market changed its decision, right? It's moved as well and started going upwards, right? Now, this, for you to be able to identify this as well, you're going to notice that the market has actually given you a high, which is what's higher than these highs, right? So it means that this particular new high right here, right now, is confirming an uptrend. So what do? You start looking for the market to return back to the blue line for it to go upwards. It's as simple as that. There's really nothing difficult about this, okay? So every single time the market gives you a lower low, we have a low over here and a lower low, breaking that line, you start expecting to go sell, right? But if you notice something in this particular scenario, the market just came and blew past that line. It didn't react over there. So if you're not a person who is following the candlestick patterns that I just showed you earlier, you would have gone to sell position right here. And by the time you go sell position at this particular point, the price will blow you off and it will hit your stop loss immediately. So with that particular candlestick patterns, you'll be able to avoid something like this and you'll not enter a trade. Now, giving you this particular one as well over here, you can see this becomes what a higher high, meaning that you should start looking for uptrend, and then the market retraces back over here. But guess what? There is no actual proper candlestick pattern to show you what to do. And that means that you have to avoid this trade. But regardless, actually, with all this, let's say you're not really following the candlestick patterns, you actually make loss from time to time, but it will not be as much as you gain, right? As long as you stick to the trade, you always trade every single time the market presents itself. It's as simple as that, right? So right now that the market is behaving like this, so we have a high over here, we have a low over here, and the low is basically still on the same line over here. So we do not have a lower low. We are not expecting anything that is going to give us a downtrend. And if this particular market actually confirms its bullish engulfing candle pattern that is trying to form right here, if it confirms it, then the best thing to do in this situation is to go long. Go ahead and buy, go long or trade, and hope for the best. It's as simple as that. You can take 2:1 risk to reward ratio. You can take 3:1 risk to reward ratio. It all depends on your trading pattern. What do you think about this strategy? It's very, very simple actually, and it's a beginner-friendly trading strategy. Go ahead and try this out and see if it will get you started on your trading journey in cryptocurrency and so on. If you actually learned something new, or maybe you actually enjoy this content, go ahead and give it a thumbs up and make sure to subscribe to the channel. And I'll see you in the next one. Take care and happy earning.